Hey guys, GoldStreams here again. So the 3rd of March, right? So the first trade of March, basically, guys. As you can see, I'm not trading my usual time. I am not trading London Open. Or pre-London. I am trading the Asian session. There is a reason behind the madness. The first reason is, and obviously the only reason is because I am fasting currently. So this is the time that I can actually trade efficiently, with sort of full capacity. And that's why I'm trading at this sort of time. I have sort of been doing a lot of back testing over the weekend, just trying to understand the Asian session a little bit. As you can see here, this is the 30-minute time frame, right? It was quite an interesting trade. The 1 hour time frame came wicked up, and sort of that long wick on the top side of the 30-minute candle, you can see that was actually hitting a resistance on the 1 hour and the 30-minute, and then we had a bearish close. The second candle came closed bearish as well, and once this candle closed bearish, I didn't really I was expecting the wicks to be filled on the left hand side. Right now there was two things. As you can see, there's a lot of bullish momentum. Right, we had market open, obviously, and the candle decided just to move straight up with pretty much no bottom wick at all. Right, and these wicks looked like rejection wicks, so I was being very, very careful, right, in the way I was trading today. Now the first position that was taken with 2% risk, and as this sort of candle sort of moved up a bit and then started making broke its own low, my position was entered, expecting these wicks to be filled on the left hand side. Now, as it's my first time trading the Asian session, I'm very, very wary of how it's going to move, right? So I was being very, very cautious. And at this rate here, at around 13, 14 pips, I closed 90% of the position and I put stops at break even, right? Now I am keeping an eye on the 15-minute time frame at the same time, right? And I'm keeping an eye on the 1 hour time frame as well. And this candle sort of moved down, and then it didn't really fill the wick to the left hand side. My close was pretty much perfect. I think it went another pip into 1 pip into profit, and then it came back. But it came back and it hit my break even. As I was making notes on the trade, this is the 15-minute time frame, by the way. As I was making notes on the trade, and this trade came back and hit break even, a couple of things were going through my mind here. I was waiting sort of for the 15-minute candle to actually close after this hit break even. So you can see there, I was waiting for the 15-minute candle to close, and once the 15-minute candle closed, I was just keeping an eye on it, sort of, with the side of my eye here, and I was marking out the resistance again, and I was like, right, so we've got massive clean range to the left-hand side for the market to move down. Bear in mind, from where the previous 30-minute candle closed, just that wick to be filled on the left-hand side was around 50 pips, right? And if the market was to move all the way down to the nearest resistance, to the previous support, it was like 300 pips. So a lot of moves, a lot of opportunities for sales, really. And as markets already tapped into previous resistances on the left-hand side there with that wick, sort of left a rejection wick, and we had candles closing bearish. Sales were looking more sort of more fruitful, right? Now, I don't normally take a second trade, especially on a Monday. Now you can keep in mind I made like 1.8% on this particular trade here, as it was hitting around 1.5%, sorry, as it hit around 14 pips, and I closed 90% at 14 pips. It was a good trade. It was a healthy trade. I was happy with it, and 1.8% is fantastic to make, on the market, in a day. You don't always. I see a lot of traders making like, well, claiming they make like 10%, 5% in a day trading. To be fair, that might happen once a month or once every other month. 1 to 2% a day is more than what you need, and I always say that. But now I'm gonna add a clip in here of the 15-minute time frame and what the 15-minute time frame was doing at this point. But as you can see, if you look at the time at the bottom of the screen here, the 15-minute candle was actually coming to a close. And as the second 15-minute candle started opening, it made a top wick and then it started breaking its own low. It's respected previous highs, right? It's respected previous highs. And then that was sort of indication for me after the top wick of that candle was made and started breaking its own low. I gave the position, I gave my original trading idea another chance. Even though the first one was a win, I still decided to give it another chance and I entered sales again. And I entered with 1% risk. Okay, so not massive. And I was aiming for a 1-to-1. So I was aiming for not a crazy move, right? I had like a 20 pip stop loss with 1% risk, and I was aiming for sort of 25 pips for sales on the downside here. And the minute I entered the position, so I was going for the original idea of that wick to be filled on the left hand side. As you can see, we had a bit of drawdown, but I wasn't sort of panicking, because if the 15-minute candle would have broke so high, I would have closed full positions and ended up still on a 0.5% reward, so still 0.5% profit for the day. But I kept an eye on it, and I was looking at it, and I was like, cool, as long as this candle doesn't break its own high. I know my high was on the previous 15-minute candle, but it was as long as this candle doesn't break its own high. The previous 15-minute candle was only like 2 or 3 pips away anyway. Yeah, my trade was valid. My trading idea was still valid. So as this position sort of was jumping around, it was hovering around in a bit of drawdown. The thing is, what I always say is you have to give your trade time. Okay, you have to understand what you've done. You have to understand why you've entered that particular position. Before you enter position, you need to know why you're entering it, what your take profit is going to be, what your plan of action is going to be, where you plan to exit the market, and how you're going to manage risk if it goes against you. Until those things happen, don't be hasty. But as you can see here, as this started to move down and started breaking its own low again, I added another position of another 1%, right? So this time, if my stop losses were to be hit, I would have ended the day in 0.5% loss. I was comfortable with that. That's fine. You know, you have to take risks, and you have to understand the risks you're taking here. Now, I forgot to move my second stop loss lower, right? So it would have been a much lower risk than it currently is at the moment, but that's fine. It never got hit in the first place. Market never went in that direction. If my first stop loss that you can see on the chart here got hit, both of my trades would have been closed anyway. I would have just hit close full, right? But I was keeping an eye on this, and I was expecting the wick to be filled on the left hand side. Now, because I entered the second position, you don't let greed take over. You have to understand that you've added now a bit more risk to the market. You had your chance to walk away with 1.8%. You didn't walk away with 1.8%. At this point, whatever happens, you're the only person that you could blame for it. So keeping that in mind, I'm being very, very cautious. If the position started to run into drawdown at this point, I would have started closing positions. I wouldn't have ended the day here with a loss after being up on the day. That's not the goal. The goal is to sort of make money and be profitable and manage risk, right? You're in it for the long run. So as the market's now moving down, drawdown hasn't been the candle hasn't come into drawdown. I'm keeping an eye on everything. And as the market's moving down, I'm closing the first position, and I'll show you. I closed the first position here at around, let me just check history today. Okay, so I closed my first position at around 13 pips. Okay, and that was perfect. So you can see here it's come back to break even. Drawdown didn't really happen. We had like 1 pip drawdown. That's fine. Came back to break even. I'm keeping an eye on the market. You got to understand that spread is also a thing. So 1 pip, 2 pip drawdown isn't really drawdown. It's just spread messing around with you, right? You have to understand what you're looking at. You have to understand the bid price and the ask price. Now, as the first position came down to, like I said, around 13 pips, I closed that first position. and then I let the second position hit full take profit at 25 pips. And that was pretty much it. That was today's trade. That's how it played out. Like I said, it's Asian session, so you guys will notice it's not as smooth as the way I trade London session, but that's completely fine. We're getting used to it. It's something that we're gonna have to get accustomed to. The beauty of trading is you can trade anytime you wish, right? As long as there's volume in the market. You have to understand sort of when's your most comfortable time. You don't want to be taking trades if you're busy. You don't want to be taking trades if you're running around. You don't want to be taking trades if you're occupied with something, right? You want to be taking trades when you're comfortable taking trades. All right, that's a very key factor. When you have time to sit down and actually in front of your PC or your device, whatever it may be, and you take trades. So as you see there, the first position was closed at 13 pips. Second position came to break even. No need to take a loss. This is a second position. It's a bonus position. And just holding it there to take profit. And it was beautiful trade because the market literally came down, hit TP. If I'm not mistaken, it hit TP and it went another 8 pips further down, and then it reversed. So yeah, that's pretty much it. Hope you enjoyed it. See you tomorrow for the next one.